Welcome, everyone. I am Lynn, the Intake and Operations Coordinator with H.I.R.E, which stands for the Hub for Integration, Reentry, and Employment. We help people who are justice involved get linked up with resources and employment readiness. Today, we are hosting our Workforce Ready workshops in partnership with BMO, who will be talking about buying a car today. This workshop is a part of an ongoing series of our Workforce Ready workshops. Our upcoming workshops for May will be our Educational Opportunities Program workshop on May 15th from 12 p.m. Our Considering Home Ownership workshop will be on May 22nd, also at 12 p.m. We also have our third annual Reentry Resource Fair on May 8th at the Honda Center in Anaheim. We invite you to come out from 11 a.m. to 2 p.m. You can pre-register on our website to save time, or you can just register there. If you are interested in attending and want more information, you can reach out to info@hireoc.org. And if anyone has any questions today throughout the presentation, you can type it out into the chat and I'll read it out for you. We are honored to have Daniel from BMO to present about buying a car.
Awesome. Thank you, Lynn. Good afternoon, everyone. Again, my name is Daniel Rodriguez with BMO. I'm sure you guys have seen our amazing commercials everywhere about how to pronounce BMO. And with that, I'll get started here with our buying a car workshop. It'll roughly take me about 45 to 60 minutes. So hopefully, if I get done quick enough, you'll get some of that time back today. So with that, I'll present the presentation. All right, perfect. Let me bring it up here. Okay, again, so welcome to our workshop on buying a car. When it comes to buying a car, people are often confused by some aspects of the process, which can result in miscalculating the true cost of ownership. Did you know that over 7 million Americans are behind on their car payments? A lot more goes into the price of a car than just the listed price. In fact, the final purchase price of a car could be as much as 10% more than the listed price when all the fees, taxes, and payment arrangements are calculated. Today, we will learn more about the hidden cost of buying a car and learn how to tell how much car you can afford and what different payments are available to you. So in the workshop, we'll talk about we'll list the cost of owning a car outside of your monthly car payment. 2, distinguish between the listed price and the actual price of a vehicle. 3, determine how much car you can afford. 4, discuss different payment options and decide which is right for you. 5, demonstrate how to evaluate a loan. And finally, apply what you've learned to shopping around and contract negotiations. So there are many extra costs to owning a vehicle besides the price of the car, right? Let's see if we can come up with some of these costs. So some possible fees that you could have to pay besides the cost of the vehicle are title fees, add-ons, the APR, annual percentage rate, maintenance of a vehicle, insurance, mileage, gas, dealer fees, and finally, sales tax. So I'll dig a little bit deeper at some of these here. So the first one I'll talk about is annual percentage rate, or APR, right? So if you buy a car using a loan or dealer financing, you will likely be charged an APR, which is the cost you pay each year to borrow money, including fees. Next one, dealer fees. If you buy a car from a dealer, you may be charged fees related to preparing your vehicle for sale, such as transporting the car to your location or documentation fee. Some other fees, title and registration fees. When you purchase a car, it will need to be titled and registered to be operated legally. Sales tax, depending on where you live, your state or locality may charge sales tax at the time of purchase. Although sales tax may seem minor on less costly items, it can really add up on a big ticket item like a car. And then finally, the other one I'll touch on here is add-ons. So new cars often advertise a stock price or manufacturer's suggested retail price, right? So this is the price of a car without any additional features, such as motorized windows, sunroof, leather seats, security enhancements, or other non-essential items. If you choose to add any of these features, this may add significant cost to the advertised price. You should also consider the cost of operating the vehicle, right? These include insurance, gasoline, maintenance cost, and the factor of depreciation. Owning a car can certainly be expensive. So a great way to make sure you get what you need when you buy a vehicle is to become more knowledgeable about the car buying process. Being informed may help you get the best deal and may save you from being overwhelmed or surprised when you start shopping. This is what we're going to work on today. So part of being informed means understanding your own needs and budget before you start shopping. First, it's important to understand the difference between what you need in a vehicle, your must-haves, versus what you want in a vehicle or what's nice to have. So must-haves are features that you cannot do without. These must-haves should be determined by you and your individual needs. So for example, if you travel a lot, fuel efficiency or good gas mileage may be a must-have. If you have
Daniel,
children, yeah.
sorry to interrupt real quick. I apologize. I just saw a message. It came directly to me, and unfortunately I didn't know where it popped up, but it was to go over the dealer fees again.
Yeah.
So sorry to interrupt.
No.
I'll pay better attention to the chat. It came directly to me. Sorry, guys.
No, you're fine. Yeah, so what dealer fees refers to is if you're buying your car from a dealership, you may be charged fees related to preparing your vehicle for a sale. So I know some dealerships charge like a drop-off fee and documentation fee. So these are fees that are associated when the dealership writes out your contract, writes down your documentation, does all the paperwork for you that gets sent over to the DMV directly. So that's what's connected to those dealer fees. I hope that answers that question. So as I was mentioning, right? So if you again you travel a lot, you want to make sure your must-have is fuel efficiency or good gas mileage. If you have children, safety features may be included amongst your must-haves. A must-have could also relate to the vehicle's reviews. Maybe you only consider cars that have good reviews for quality. Now, nice-to-haves, on the other hand, include features like car make and model. I know and different add-ons. I know right now a popular car that everybody's looking to buy is a Tesla, right? So that's kind of like nice to have if you're able to afford that type of vehicle. And other add-ons that are nice to have are features like Bluetooth, GPS, and the backup camera. I know mostly all the cars now pretty much have all those features, but I just kind of like to highlight that because there's still some vehicles that don't have those additional add-ons, but they're nice to have. Now, the first thing we'll look at is the cost of just purchasing a car. Here's what happens to many people. You see a car being advertised, right? So we all get those flyers or emails saying, hey, we have 3 cars at this price, right? So here's what happens. So they advertise the car for a certain price and you think the deal sounds great, right? But what car dealers are doing is they're advertising a discount off the manufacturer's suggested retail price, so the MSRP, or a rebate, a cash back on that purchase, right? You might think, wow, that's such a great deal. I should go talk to a salesperson today. So what this is a great advertising technique used by salespeople or dealerships, but it doesn't tell the full story. So we as consumers, right, we see that the advertised price is not what the vehicle will cost at the end of the sale. Many additional charges, what is sometimes called the fine print, right? That little writing at the bottom that we don't like to read, and that is all added at the end. So in this example here, right, when you buy a car, there are many extras that go into the final price. First, there's the base price that we see here. This is how much a car costs at the dealership without any add-ons or options. It's the very basic model of the car. Then you may be charged for any add-ons. Again, add-ons are extra items like daytime running lights, four-wheel drive, GPS system. You may also be charged if you decide to purchase an extended warranty, which means it's an extra warranty coverage that kicks in when the manufacturer warranty expires. The other thing you'll see when you purchase a new or used car, these are the fees that are going to be included. As I mentioned, dealer fees, right? These are the fees the dealer charges for their services, sales taxes, taxes that are charged by the state, registration, DMV fees, title fees. This is the amount that the state charges for that first year of the registration and to transfer the title or ownership to you as the buyer of the vehicle. And also California is also includes license plate fees for that first year, right? The dealership takes care of all that for you. Some other charges that you'll see that some dealerships charge is administration fees, the filing fees, the documentation fees, right? All these fees are what the dealer charges to get that paperwork to the DMV to print out your contract and to go over it with you. So as I mentioned, right, these are all extra fees that the dealer can charge you to cover their own cost of having to go to the dealership. So like in this example, you may think you're buying a car for $18,999, right? What a great deal. Because that's what the advertised price says, because that's what got your attention. But after I showed you all these other fees that are associated with it, like this car might wind up costing you over $20,000 once all those charges and fees are added into your contract. If you don't pay cash for the car up front, you'll need to get financing from the dealer or a loan from a financial institution. And I'll go through that in a few slides here. So each month, you'll pay the financial institution or a servicer a portion of the total cost of the vehicle, plus any interest and fees they charge for providing the loan or financing contract. What's important to understand, though, is that you also need to consider the cost of getting a loan or financing a car when you determine how much car you can afford. Just to give you an idea of what you could be paying a month for a car payment, according to Experience State of the Automotive Finance Market Report, the average monthly payment on a new car to date is about $500. So that's $500 a month when you finance a car, but there's more. Don't forget about the cost of owning a car as well. So some of the costs associated with owning a car are obvious, right? So we need gas or electricity to operate your car. Every year you need to renew your car's registration in California. And then there are the basic maintenance fees for your car. You need an oil change every few months, tire rotations, new tires, filter changes, and general repairs. There's also depreciation to consider. This is how much value a vehicle loses over time. So for instance, new vehicles lose an average of $15,000 in value after 5 years. And I'm sure we all heard the phrase that we use in the industry as well. Once you drive that car off the lot, that car automatically depreciates at least 10% of the purchase price just for driving it right off the lot. So what does this all add to? I know there's a lot of figures here on the screen. According to AAA, the average cost of owning a new vehicle in 2022, not including insurance, was about $10,728 a year. The most affordable vehicles are small sedans like your Corolla, your Sentra, right? Those are considered small sedans. And the most expensive are pickup trucks. Electric vehicles have the lowest annual maintenance and repair cost of all vehicle classes and have a low fuel cost for obvious reasons. The reason they are not the most affordable is because they have a higher than average depreciation. That's why if you guys seen the Tesla market right now, a lot of those Teslas that are either being bought used, they're getting sold at a lot lower price because they're depreciating in value a lot quicker than a standard gas operated vehicle. So now we focus simply on out-of-pocket cost. The average yearly cost for maintenance repair is about $1,186, and the average yearly fuel cost is $1,500. Obviously, with today's gas prices, that average fuel cost is definitely going to be increased to about $2,000. So if you take a look at that total, this comes to about $2,686, which works out to be an average cost of about $225 per month in addition to your monthly payment. Not only is that, right, there's also auto insurance. So car insurance rates vary by company, by your driving record, by the policy, and the vehicle insured. Most statistics list that the average insurance payment across the states is about $100. I know in California, that number is a lot higher than that. So in many states, you're required to show proof of insurance on your car before you're even allowed to drive it. So in many situations, insurance is a must-have. So now that we've kind of reviewed the average cost of owning your car, let's add them all up. And how much does it cost per month to own a car? And as you see here, some figures, it kind of gives you the annual cost of each specific vehicle that you may look to own. But on the next slide, I'll talk a little bit deeper about this slide here. So the average, once we take a look at loan payment, maintenance and fuel, and insurance, the total is $825. Now, how many of you think that's a lot or more than you expected? Elizabeth, did you have a question? Or are you saying that's a lot, right?
Both. Yes, that's a lot. But also, would the insurance be more? If that's just a like a estimate if the person has been driving for a long time.
Yeah, this is just a national average that we took. That's why I mentioned California. I know it's a lot higher. I mean, I think my insurance is like almost $300, but this is just taking an average of that. So you can
Okay,
imagine.
because I
Yeah.
I I don't have no driving experience. So how much would my what's it called?
Your
My payment
insurance?
be?
Yeah.
Yeah.
Yeah, your insurance typically in California right now for like first time like drivers or just getting, insurance. I've
Mm-hmm.
seen in California the average is anywhere between 150 and $300, depending on your coverage, right? So depending on what's in your policy, are you going to have a full coverage policy or are you just going to have a liability policy? So it's all going to come down to those factors when you talk to an insurance agent.
Well, I do know that if you're getting it from a dealership, you have to get full coverage, right?
If so that's a great question. So if you're leasing a car, you do require full coverage. If you're buying a car, it's up to the home, it's up to the owner if they want to do full coverage or just liability.
Oh, okay.
Yeah. So like Elizabeth said, right? So it's a lot. But remember, you may not have to pay that amount, right? And we'll discuss some strategies for lowering our payments. So now that we know what the potential cost could be, let's talk about working on a budget so that we're fully prepared when you start to shop around. So this is just an example. So for instance, if we keep that number, right? So we spend about $800 a month on all expenses related to the car. Current insurance, again, is an average $100, while maintenance is $225. You can assume that you'll be able to spend approximately $475 on your monthly car payment. Of course, your car insurance, again, as I mentioned, and other expenses may change, especially here in California. So if you get a car that is very different from your current car, you can use these figures to give you a basic idea of how much you can actually afford. Now that we kind of have an idea of what you would need in order to purchase a new vehicle and how much you can afford, let's discuss various ways to pay for it. So how many of you plan to pay your car using all cash? This means, you have the full month, the full dollar amount. You're going to walk into the dealership and you're going to pay cash and you won't need to apply for financing. I know, right? Me neither. Hey, I'm right there with you. I don't have cash to pay a car in full. I wish I did. So I'll just say this: paying a car for cash is obviously the best way because you own the car immediately, right? And won't be charged finance charges, interest rates, things of that sort. However, most of us, like including myself, aren't able to pay for a car right. In fact, I like statistics. So about 85% of buyers use some form of financing to buy a car. So it's a pretty common thing, right? So now let's go over some options here. I want to touch on the cash piece. We obviously know you pay up front, you own the car immediately. Direct lending. So direct lending is when you get a loan from a financial institution like your bank or a credit union directly. With direct lending, you can get approval for a loan amount before you even start shopping for a car. So this may give you a better idea of what you can afford. Also, you can apply for loans with different lenders to find the best deal, right? So if you work with your bank, you can obviously get pre-approved with your bank. So now you kind of understand, hey, this is the payment I'm able to afford. Let me look at cars in this price range. So that way you have the power to really navigate that sale when you're dealing with the salesperson at the dealership. Third piece, obviously dealership financing. With dealer financing, you find a car you like and you apply directly with them, right? Specifically through that dealer. You and the dealer then enter into a contract where you agree to make payments toward the purchase of the vehicle over time, agreeing to pay the amount financed plus any finance charges that they're adding to the contract. So dealer financing is very convenient because it takes place at the same time you buy a car. Also, you may be able to negotiate the finance terms with the purchase price of the car. I've seen people that are financing directly with the dealership, so they're able to get a discount on the car, right? So these are all things that you can negotiate with. The downside is that you can't shop around as much, right? Because now you're limiting yourself to financing options directly with that dealer. And then finally, leasing. So leasing a car is more like renting, right? Than buying. You don't own the car, you can't sell it. And there are also rules you must follow during the lease, like how many miles you're able to put on the car on a yearly basis. To Elizabeth's question, you are going to be required to have full coverage on a leased car because you're renting it, right? So the dealership has to be protected for whatever case, something happens. They cover the cost of fixing the vehicle because you're leasing it from them. So leasing is a good option for people who like a new car every few years, right? So typical leasing terms is 2 to 3 years. You get bored of the car, you're able to lease a new car, and the monthly lease payments are often less than the monthly finance payments, right? So that's kind of why a lot of people like leasing cars. Now, being able to understand how much you can afford in a vehicle and the different payment options, most of us will probably need to use some sort of financing, as I mentioned, right? 85% of people use financing when they're buying a car. So the next section, we'll cover what to do to prepare for financing or lending, particularly what you can do to make sure you're getting the best deal and your monthly payments are as low as possible. Elizabeth?
I have a question. So my credit card is with Capital One, and they gave me a pre-approval to get a card through them. Do you think that's a good idea or not a good idea?
So honestly, my first car purchase was actually through Capital One. I know Capital One,
Hey!
yeah. Capital One does a good job of monitoring your credit score, right? And then that way they build out a custom plan for you because they understand how much you're spending on their credit card, what your payments are on a monthly basis. So then they have a car loan program as well. So now they're calculating how much you would qualify for based on your history with them. And we'll talk a little bit more
Okay.
about credit and how that works. Yeah.
Okay.
So again, so this section may not be relevant to your car buying experience. However, the information we're going to discuss can be applied to any loan. So from credit cards to a home mortgage here. So generally, this is just a rule of thumb. The less you need to borrow, the lower your monthly payment will be. And there are 2 ways to reduce the amount you need to borrow. You can make a down payment or trade in another vehicle, right? Or you can do both. So as I mentioned, a down payment is the cash you pay up front toward the overall cost of the car. The more you can pay in cash, the less you have to pay overall. Some lenders will, and this is strange to me. This is not common practice anymore, but some lenders will actually require that you pay a percentage of the sales price up front. So a few years ago, this was as much as 20% down. So now typically required down payments are as low as 9%, and even some lenders do not require down payment at all. We've seen that, right? It's like, hey, come get a car, 0%, zero down. So there are all those options available. But keep in mind, the less you put on the down payment, the higher your monthly payment is going to be. A trade-in is when you offer your old car as part of your down payment, right? What I would suggest is to research the trade-in value of your car through a variety of online sources. For example, you can use Kelley Blue Book. You can use, I believe now, I can't remember the name of the company, the one with the vending machine where they give you a giant coin. They actually have like a mechanism.
Carvana?
Yeah, Carvana, exactly. Thank you. So Carvana, like you can actually plug in your existing car, see what the trade-in value is, so you have an idea. So another piece is, what if you still owe a lender for your current vehicle? Can you trade it in? Of course you can, but it's best if you owe less in the vehicle than it's worth. Otherwise, the dealer may factor it into the financing agreement, which will increase your loan amount because you're borrowing the combined cost of the new car and your old car. I hope that makes sense. So the next piece I want to cover is knowing how much you can put toward a down payment or use toward a trading before you start shopping for a vehicle is very important. So for instance, researching the trade-in value, as I mentioned, right, either through Kelley Blue Book, Carvana, and some other internet resources that can help you what your trade-in value is. Because here's the thing. So when you trade in your vehicle, it's going to give you a range of figures, low end to high end. Now, depending on the research you do and the dealer that you're going to decide to buy your car, they may only tell you the lowest trade-in value so that they earn more when they sell your existing car, right? If you're using it as a trade-in. So keep that in mind. If you're trading in a car, make sure you do your research. find out what's the highest trade-in value you can get and what the low end. And if you have that information, now you have ammunition when you go to the dealership and trade in your car, because they're always going to try to give you the lowest. They're always going to try to lowball you for that trade-in. So they make more money off of it when they resell it, and they also make more money by adding what you owe, if you do owe anything on it, to the new loan. So the next piece I want to cover is getting the best deal possible is to understand your credit worthiness. Your credit worthiness is how lenders determine how likely you are to pay back a loan. And it's based on many factors, right? Including information about your credit history, such as how well you've paid back your existing loans, credit cards, things of that sort. So credit information is collected by the credit bureaus. They put it into a credit report, and they use to determine your credit score. So as a lender, we may look at your credit score when deciding whether to offer you a loan, and if so, what interest rates they'll charge you. If you have a low credit score, lenders may refuse to lend you money at all, or may charge you higher interest rates. So we have seen that. On the other hand, though, if you have excellent credit, you may be able to negotiate lower interest rates at the dealership. Generally, lower your interest rate, the less money you have to pay to the lender overall. Since the information in your credit report is what's used by lenders to determine some loan terms, it's very important that you know what's on your credit report. You are legally entitled to receive a free credit report from each one of the 3 credit bureaus every year. And you can order this either online or over the phone. So the free credit bureau reporting system is www.annualcreditreport.com. That's a free service that's actually offered to the government, where you're able to obtain that free credit report. Now, here's the one thing about ordering your credit report, though. Your credit score will not be listed on your credit report. So to learn more about obtaining your actual credit score, start by visiting the websites of the 3 major bureaus, right? Experian, Equifax, TransUnion. Some financial institutions, like BMO, Bank of America, Wells Fargo, they actually give you your credit score. So they'll be able to provide you like a detail, hey, before you go to the dealership, you understand what your credit score is. So that way you can compare it to the credit report and then see how you match up to understand what interest rates you're going to be looking to pay. Now, lenders may use that information on your credit report to help calculate your debt to income ratio, or as we call it in the bank, DTI ratio. So your DTI ratio gives lenders an idea of your current debt situation and your capacity to take on more debt based on your income. So in Elizabeth's example, Capital One has that information. So they've determined your debt to income ratio based on the credit you have with them and how you're paying back that credit card. So I'll talk a little bit more about DTI here. So to figure out your debt to income ratio, or your DTI ratio, you need to add up how much you pay per month for your current debts. Examples: mortgages, student loans, credit card debt, and then you divide that number by your gross monthly income. The lower that DTI ratio is, the better you are positioned to take on an additional debt. So while many lenders offer flexible agreements, they are typically looking for a debt to income ratio of under 40%. So again, I'll just end with this for this particular slide. So the importance of understanding your creditworthiness so that you increase your negotiating power when you apply for financing loan is key. Now let's spend some time talking about auto loans so that you know what you're looking for when comparing them. So when comparing different loans, it's important to evaluate how much you'll be charged by the lender for taking on the loan. To do this, we want to take a look at the interest rate and the annual percentage rate. So interest is the fee or the amount charged by the lender to borrow money. And that's different than APR, right? Which is the interest plus any other fees that you will be charged annually for the loan. So both figures are expressed in percentages, and both figures are useful for comparing loans. It's important to understand, though, however, that the APR and interest rates are 2 different figures. So when comparing different loans, remember to compare interest rate with interest rate and APR with APR, not interest rate with APR. Another thing to understand is the auto loan interest is amortized. So this means that one part of your monthly payment will go toward paying off the principal, which is the amount that you borrowed, and the other will go toward the interest. Earlier in the loan, more of your monthly payment will go to the interest. This switches toward the end of your loan terms, with more going to the principal. So as you can see here on the slide, and this is a kind of a way we're going to calculate here, the interest rate. I know it looks a little bit complicated as it follows a complex formula. Fortunately for us, there's many free calculators that you can find online, right? But I want to just give you an idea of why interest rate is so important. So in this example, we see Thomas bought a car for $25,000 at an APR of 6% for a loan term of 4 years. When we input his information into an interest rate calculator, he learned he would be paying $28,182.03 at the end of the 4 years. That amounts to $3,182.03 paid to his lender just for giving him the loan. So Thomas was disappointed to learn this, but it was too late. He had already signed a contract. So when you're paying thousands more in interest, comparing APR or interest rates becomes very important. So we'll look at another example here, and we'll plug in Thomas here with Sadi. So Thomas has a pretty decent credit score. His credit score is near 700. His friend Sari, on the other hand, has excellent credit with a credit score of over 800. The dealership offered them the same financing terms, right? So they're both paying the loan in 4 years, 48 months. But because her credit score was a lot better, she was able to negotiate with the dealer and was able to reduce some of the financing fees and interest rates. So as you can see there, her APR was moved down to 4%. So for the same exact car over the same loan term, Sadi will pay $1,000 less than Thomas, all because she had a better credit score and she was able to negotiate at terms with the dealership, right? So this example, again, shows you how important the interest rate is and the APR is when you're shopping for loans. But there's another feature of any loan that is crucial to take into account when it comes to calculating the amount paid for a vehicle. Does anyone know what I kind of just went over it? Does anyone have an idea what that feature is? Don't be shy. It's okay. So the other piece is the length of the loan, right? So the amount of time that you're actually in that loan can have a big effect on how much you end up paying. So let's take a look at another example here. So as you can see, loan A and loan B are for the same amount, but we switch the APR and the loan term. So which loan do you think is going to be less expensive? Is it loan A? Is it loan B? Or there isn't a difference? I see someone in the chat.
Sophia said loan A, Megan said B.
Well, thank you guys for your answers, but to be quite honest, there's no difference actually. So even though loan A has a lower APR, but the extra 2 years on the life of the loan causes more interest to accrue, making it cost more. This is why it's just as important to look at the loan term as it is the APR. So it's kind of interesting, right? So here it is here. Here's the actual information. So loan A, you're in it for 10 years. Look at the total interest. Look at the difference between having the loan for 4 years at a higher interest rate. You're actually paying just about $16 more for cutting that loan term from 6 years to 4 years, even though you're paying a higher interest rate, right? So definitely interesting there. So I understand that a lot of people, you typically agree for lengthier loans because they generally have a lower monthly payment, right? If you have it for a longer amount of time. But in reality, it may not be worth it, as you can see in this example, right? If you can't afford monthly payments on a loan with a term length less than equal to 5 years, then that specific car probably isn't in your budget. So we might want to take a look at a less expensive car for it to make sense for your budget. Now, another tip that many experts encourage people to follow is even more conservative. I'll just share this one with you guys, but it's very conservative. So the tip is called the 20-40-10 rule. So the rule states that it can help you determine if you can actually afford a particular vehicle when you begin shopping around. This may not address everybody's financial situation today or in this room, but you may find it a valuable tool to help you budget. So here's what the rule actually states. So the rule says you should make a down payment of at least 20%. Number two, you should plan to finance a vehicle for no more than 4 years. And number three, your total monthly car payment, which is principal plus interest plus car insurance, should not equal more than 10% of your gross monthly income. So for example, if my gross monthly income is $5,000, 10% of that is $500. So all in, what I'm able to afford to pay for my car payment, for my insurance, shouldn't be more than $500 based on my gross income of $5,000. So again, as I mentioned, right, the first part of the rule says to make a down payment of 20%. You can apply this rule in two ways. First, if you know how much you can put down in a vehicle, you can figure out how much you can spend on the purchase in total. Or if you already have a car in mind, you can figure out how much you'll need to put down based on its listed price. So I'll give you an example here on the next slide using that rule of 10%, which for me was $500. So I know that I can put $500 cash toward a down payment for a new car, and my old car has a trade-in value of $2,500. That's a total of $3,000. Now, if we divide 3,000 by that 20% rule, we get $15,000. That's how much I can afford based on this down payment rule. Does that make sense? Now, I want to buy a dream car, right? My dream car costs $32,000. To afford this, I will need to put down $6,400 because I took that 20% rule, right, and calculated based on, hey, how much do I need to put down? So that means I need to save another $4,000 more to be able to buy my dream car or settle for a car that is my dream car today and start planning for that future by saving money for that dream car that I want to purchase. So I can do a little bit more research to see if my dream car is even in my budget by calculating what I can afford in monthly payments. So with a gross monthly income of $5,000, like I said, I shouldn't be spending more than $500 on my monthly vehicle expenses. So now that you have acquired some background information on car buying and what you should do better prepared for the process, let's talk about the car buying experience. So when you're ready to buy a vehicle, you should be prepared to put some work in, right? First, you'll need to do some research, which means looking at different vehicles within your price range. Second, you'll need to research your financing options. Third, you'll need to do some negotiating with dealers or lenders. And finally, you have to ensure you're making the right decision before signing a contract. Sure, I understand that this takes some time and effort, but honestly, it could save you thousands in the long run. So the first one, research your options. When you're trying to decide on a vehicle, make and model, look at published car reviews from reputable companies, consumer reports. I know we have access to the internet, so you can do some research, right? What car's going to last me the longest amount of time, things of that sort. So now once you narrow down your list, narrow down the cars that you like based on their price range and what interests you. Second piece, shop around. Don't just go to one dealership. I know that tends to happen to a lot of people. They go to one dealership and then they get hooked in by that car and then you get pressured, right, to buy that car. But you're allowed to walk away. Don't let salespeople keep you there. Shop around. So when you start shopping for a car, look at both local and online dealers. Finding the right car may take some digging, especially if you're looking for a used car, but you want to make sure that at least are your must-haves and it's priced right. And also don't forget to shop around for financing options, both with your banks and also with the dealerships. Who's going to give you the best rate based on your credit? And here's another rule of thumb if you're like shopping at different dealerships. It's important to know that when you're shopping around for these financing options, right, the lenders will likely run your credit report, which is known as an inquiry. So inquiries are recorded on your credit report, and too many inquiries may affect your credit score. However, depending on who's watching multiple inquiries within a short time frame, I mean between 14 to 45 days, are generally seen as shopping around and only count as one inquiry on your credit report. So if you are shopping around for a car, that first dealer that pulled your credit is going to be used by other dealerships within that time frame. So anywhere between 14 and 45 days, that same inquiry is going to be used at all the dealerships. So it won't affect your credit score multiple times. Again, though, just make sure you're not shopping around for over a month and a half, because if it's over that 45-day window, then you are going to get hit with another credit inquiry. And then finally, negotiate. All this shopping around and research will help you negotiate the best deals. There are two places where negotiating will serve you the best: negotiating the total cost with the dealer and negotiating your loan terms. I just have an example. Last year, I bought a new car, went to a couple different dealerships. One dealership was offering me the same car over $10,000 of what another dealership was offering me. So can you imagine if I only went to that one dealership, I would have paid $10,000 or more for the same car I bought at another dealership. Crazy. That's why it's always important to understand, do your research online, different dealerships, who's going to get you the best deal. And also you're going to be able to negotiate those terms, right? Because you can use that information. Say, hey, Ford, in Fontana is offering me the car for $5,000 less than you here in Huntington Park. So what that's going to happen, that you're going to have better negotiating power if you really want that car from the Huntington Park dealership versus the Fontana dealership. Because now you have negotiating power since you've done your research of who's going to give you the best deal on that vehicle. Now here's the fun stuff. It'd be a shame to go through all that work of shopping around, negotiating the best deal, only to have the contract state something completely different than what you expected. So the Truth in Lending Act protects consumers by requiring the lenders clearly state the information terms on the loan and the contract. So this includes a clearly stated APR, how the finance charge is calculated, the dollar amount of the finance charge, the amount to be financed, the total amount to be paid, broken down by principal, finance charges or fees, and down payment, and then finally the number of total payments with amounts due dates listed. So before signing that contract, I know we get excited, we just want to sign the contract and walk out the door with that new car. Be sure to read over all those terms of the loan. If anything differs from what you expected, do not sign the contract. Have the lender or salesperson rework the contract until it reflects the terms you verbally agreed on, right? Because the salespeople tell you, oh yeah, this is going to be your monthly payment. Then you go to this, the lease, the lender office, and those terms completely change. You want to be able to negotiate that before you sign anything. Now, covered a lot of information when it comes to buying a car, but that's not the end of the car buying journey here. So your financial responsibilities are ongoing, especially if you have a loan or retail installment contract. So let's say now we've reviewed the loan, we agree on the terms, you sign the contract, and now you're being handed your keys to your car. You need to make sure you pay your loan back. So we'll close the course out by discussing some important information about car payments. So first and foremost, be careful about paying your loan off early. So this is kind of important to note too. It's good to pay down your debts, I understand that, but you need to be smart about doing so. Remember, the longer the life of your loan, the more money a lender makes in the deal. So it's in their best interest to keep you in the loan as long as possible, right? So for this reason, many lenders add a prepayment penalty to their contracts. So that's something, again, make sure you check your contract to see if paying off your loan early will result in a prepayment penalty. I know a few dealerships that still do that. They say, no, you can't pay off your loan until you complete the 5 years. But there's other dealerships that say, hey, yeah, you can pay off your loan sooner, no prepayment penalties. So just make sure that you're looking at that again before signing that contract. Also, if you want to pay more toward the loan than your amortized pre-calculated monthly amount, make sure that that extra payment is applied to the principal, not the interest. I see that a lot with a lot of our customers. They usually send like an extra payment, right? Let's say the payment's $500 and they add an additional $200 when they're paying their loan amount online. And if you don't specify that extra $200 is for principal, guess what? That extra $200 is going to be applied to the interest. So just make sure that if you are making additional payments, that you're notating either on your online billing system that this is going to be used for additional principal. And again, how does that help? Because again, lowering the principal will reduce the amount used to calculate your interest going forward. And most importantly, pay your bills on time. I can't stress that enough. Late payments can be noted on your credit report and may affect your credit score. Seriously, late payments could lead your lender to sell your loan to a collection agency, which will further impact your credit. And late payments could also lead to your car being repossessed, right? I think right now the last thing I heard is if you don't make 3 consecutive payments or they're late, I think for 6 months, the dealership has a right to repossess your car, which is pretty gnarly to me because they're calculating how late you've been in, because now you just prove to the lender that you have inconsistencies with your payments. So again, please make your payments on time. Not paying your bills on time can have heavy financial and legal ramifications, like I just said. If you have any concern about your ability to stick to the payment terms on your loan, you may want to reconsider the purchase or talk to that lender. See how you can make that payment more comfortable for you. And I'll be honest with you, a car, especially a brand new car, is a very expensive purchase. And an auto loan is a legally binding agreement that shouldn't be entered into without any consideration. All right, to wrap up, understanding the car buying process, especially when it comes to negotiation and financing, can help save money and prepare you to enter into a contractual agreement with the lender or dealer. Be sure to evaluate your needs and learn more about your own creditworthiness before shopping around for the best offers. The more information you have, the easier it will be to negotiate. Purchasing a vehicle is a big investment, whether that's a new vehicle or a used vehicle. Any extra effort and time you take to prepare could save you thousands of dollars and a lot of headaches. And with that, I'll turn it over to Lynn for any other questions.
All right, thank you everyone for coming out, and thank you, Daniel, for giving that wonderful presentation. And we'll hope to see everyone at our Reentry Resource Fair on May 8th from 11 a.m. to 2 p.m. at the Honda Center in Anaheim. If anyone has any other questions, you can type them out into the chat. If not, have a great rest of your day.